You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. I'm your host, Kerry Lutz. Well, person you're about to hear from, author of recent book, and I think you can profit from it, entitled Retire Right, Secure the Right Path to Your Retirement. That's a mouthful. Brad Barrett's with us. Brad, so obviously you wrote a book about this. You've been advising private individuals, families on investment, retirement planning for many, many years. Mm-hmm. So you've given this a lot of thought. How do you retire right?
Yeah. Well, how do you sum up a book in one sentence, right? Well, anyways, I appreciate you having me on the show. And yeah, you know, in nearly 2 decades now, it's more of an art than a science, I think, for everybody. I know everyone out there is kind of look for, certain, I don't want to say like get rich quick schemes or just certain things to fill a hole that they can do it right. It's really more of a process and planning. And I know that may be more of a vague answer, but it's something I've learned and gleaned from. And as long as I've been doing this, that retiring right is a subjective term, I think, and I touched on this in the book, for each person, defining their goals and objectives, aligning their values and interests with what they're trying to do. And then that to us encompasses a lot of stuff, what you talk about too, Kerry, like what you're putting into your portfolios, what you are utilizing, to get you to the finish line, so to speak, right? I think a lot of times in our industry, we tend to have the types of investments, be the tail that wags the proverbial planning dog when it should be the other way around, kind of understanding, setting your course, finding the right platform chassis. Then you look at things like the investments, and there's no right or wrong in all those things, the diversifying and those kind of things, but you want to make sure you know where you're going first. And so I touch a lot on that in the book, and I do a lot of that discussion on our show, the Make Your Money Matter show, on our podcast and YouTube and our radio shows here in the LA area. And so that's something we focus on.
All right. So basically it's setting the right goals. And to do that, you have to ask the right questions, right?
Yeah. Yeah. So that's a great point. I mean, at One Capital, my firm, our first discussion with a client is what we call our discovery. So Kerry, right to your point, right? It's asking the right questions. And it's not just asking the questions that are what we'll call like quantitative questions of numerical data and, assets, incomes, debts, those kind of things. Those are important. It's also equally as important as the qualitative assets, right? Their goals, their interests, their values, and that kind of aligns where they're heading with their money. And then I think a good portfolio manager, a good advisor can encompass the right investments, the right vehicles, if you will, to get them there. Our statement here at One Capital has always been wealth management should be very simple and elegant. It doesn't need to be some complex 80-page financial plan that a lot of these, I had to say it, but a lot of these retail advisors are kind of spitting out there. They're like this thick, right? And they're, 2 pages of what the client actually cares about and about 78 pages of disclaimers and disclosures that, doesn't matter, frankly. So
yeah, all the good legal stuff, right?
Yeah, exactly.
So, what do you think most people do wrong in this whole retirement redux?
I think what I realized, and I've been talking a lot about this lately, and one of the reasons why that question is so profound, I think, for anyone watching or listening, is the idea of what we tend to get wrong about money has a lot to do with where we place money in our lives. Like, again, people will go to, I've noticed, especially in the past probably 10 or 15 years, and I think, Kerry, you could probably agree with this, like we're going to, whether right or wrong, the internet, shows, podcasts, YouTube platforms to get this information. And none of that is bad conceptually, right? It's just how you are perceiving that in your own life through your own lens. And one thing I touch on a lot in our practice is the behavioral finances that we all have. And I don't think we talk about it a lot. I think people tend to forget that we're still human beings. We're not robots just yet. So the idea, and the idea is interesting when you think about it, right? So anytime I sit with a client in a discovery meeting, whether they call in from our YouTube show or our radio show or just referrals from our clients, I want to understand their behavioral financial DNA. And I think we tend to get it wrong about money is we think we're one way, and the reality is there's a whole, like the iceberg analogy, right? We kind of tend to look at the top part and forget the whole thing that's underneath it, And it's like, there's two forms really that comes to light when this discussion happens. Is there's like the God-given, the DNA, no different than the color of our eyes, right? Just who we are naturally. And then there's a circumstantial, like what we've lived through, good or bad. And we bring that into a topic as important as money, right or wrong, I had a client, I was just talking about this the other day. I had a client a week or two ago that their father had worked for 30 years at a municipality, a fire department, and no joke, about after the 30 years, retired, 7 months later, brain tumor, and then about 3 months after that, passed away. And it was really sad. And he's a 35-year-old young family client of mine as well. And his concept of money from that experience, right, if you think about it, was in his mind was all wrong. He's like, now I just want to spend because I don't know if I'm going to make it past that. I mean, life is short, kind of thing. And this is not a joke. The next day I had a client discovery with a client, and we were talking about life expectancy and just different things of that nature. And they're like, oh, my family lives to like 102. Like I had both my mom and dad live to like 98, 100. And so their whole concept was the fear of running out of money, right? The sustainability. So they were like not spending anything because they wanted to make sure they had money into their 90s. You know what I mean? So you have these like two polar opposites of planning and discovery that we tend to think we know about money and how it relates to our lives when we use it as a tool, like a utility, rather than understanding how does it fit for you in your life. And I think that's what we get it wrong about money. We tend to think whatever's shown to us is how we should think about money. And the reality is we need to kind of filter it into our own life. And what does it do for us? And I know that sounds a little, outside the box planning, but it really helps to shape any plan that we as a private wealth advisor would put together for a client.
Okay. So tell us, so you got to get people in the right mindset for this. In other words, get them focusing on the important things. Longevity definitely plays into this, people living longer. And like you said, our parents, and I think many of you out there, as well as myself, always worried about outliving your money, because being broke and old is not a good state of affairs by any stretch.
Right.
What's the first thing you tell people to focus in on?
Well, I think the biggest thing, whatever, I call it the ages and stages, right? The age and stage of life, the seasons of life. I think the thing we need to understand most is that, assets and income are a married concept. They really are. They need to be able to be producing for you either in an illiquid form of appreciation, which we kind of know as we buy something, lower and it appreciates higher, right? But at some point you need to liquidate that to bring income in to use it or utilize it, right? Or conversely, have that asset, whatever that might be, pay you, whether through dividends, whether through rent checks, whether through, whatever it might be. So income and assets are a married concept for those that are out there kind of in the retirement world, thinking about how do I sustain my assets? And then from that macro level, you can kind of dial in a little bit more micro and figure out, okay, what types of assets do I have? One statement I always say often is it's not always what you own, but how you own it, right? So whether you own it in a 401k or an IRA, or you own it in a trust account or brokerage account, those are very different animals, after tax versus before tax. Then you get into kind of the specifics of things and what different asset classes do for you, right? That's when we get into the portfolio management side, having diversification, everything from, equities to fixed income to commodities to alternatives and the like, and how all those play into sustaining the objective for the client. And it really comes down to, everyone likes to focus on rate of return, who doesn't, right?
Sure.
And I always joke with people, I'm like, if I met you at a coffee shop and you were saying, oh yeah, my 401k is killing it, or whatever asset class is killing it, great. And I'm like, cool, have you gone through what that is going to end up paying you or what you need in retirement? And usually it's deer in the headlights look. And I'm like, you have to understand the distribution rate of what you're taking over the course of your life once you stop working, whatever age that might be, matters equally as much as the rate of return you're making, right? I mean, if you think, I remember years ago, Kerry, there was a guy, and when I was getting my economics degree, we were in this honors society, and this guy came in with probably like 20 letters behind his names. I'm 20 years old, and I'm like, this guy must be super smart and, going to say something really profound. And he comes in and he goes, if you were to pick any rate of return you want, what would it be? And kind of the room was silent for a minute. There's only 20 of us. We're kind of like, who's going to speak first, you know? And a guy goes like 10%, right? And he goes, really? Any return, you're going to choose 10%. Then it started going to like 100%, 1,000%, you know, just ridiculous stuff, right? And he goes, I asked that question because it doesn't matter. It's irrelevant. The rate of return doesn't matter if you're spending over the rate of return. So income, assets, sustainability for anyone out there, you know, it's like understanding what is earning for you relative to your distribution rate or withdrawal rate or whatever you want to call it matters. That's how you create arbitrage. That's how you create living a life of retirement in abundance versus scarcity. You know, going into that season of life, I joke with people. I mean, I've been doing this since I was 16, believe it or not. There's a whole backstory there. I'm 36 years old doing this almost 2 decades in the financial advisory. So I'm a younger advisor with a lot of experience. And I joke with people. I'm like, I've never been retired before, but every week I see one of my clients retiring. And so there's a lot of experience gleaned just being in that conference room with them. And I like to share that and kind of saying it's less, if you do it right, it's less numerical, it's more emotional, you know? I don't care if you sat with someone or you go through stuff and it's like, you know, you're like, I worked 30 years or whatever it is with these. And then all of a sudden some guy in a black polo is going to say, all right, your money can now pay you for the rest of your life. You're good. You know what I mean? It sounds great in theory, but it's actually, I sit with I counsel a lot of people the first couple of years of retirement. It's more counseling than anything of getting used to that, you know, working for your money versus then your money working for you. Again, sounds really conceptually great, but the mind kind of plays tricks on you, you know? And so we really try to get into that DNA, get into that behavioral discussions. And like you said, getting them prepared and mentally ready for where they're at.
Understood. So let's bring it down to brass tacks, to reality here. Where are the best places to be putting your money now? The stock market, everyone's worried about the next dip down, the next pullback. It's had a nice rally. It's still rallying today, even as we speak on March 6th. But how much longer can that go on? Do you go into the stock market? Are you stay in? Do you reduce your holdings? What do you do?
Don't just survive, thrive. The Financial Survival Network.
Torque Resources is an exploration company establishing a portfolio of premier copper gold early stage projects in Chile. Torque's management and technical teams have a strong track record of raising capital, discovery, and monetization of exploration successes. The company's Margarita Copper Gold project is located within the prolific coastal Cordillera Belt in Chile, which hosts some of the world's largest and most profitable copper mines. The Margarita project possesses excellent discovery potential for a major copper discovery due to the strength of the alteration system, large-scale magnetic targets, and the presence of copper oxide mineralization. Drilling is anticipated to begin in Q3 of this year. Torque trades in Canada under TORQ and on the OTC under TRBMF. To learn more, go to torqueresources.com. That's torqueresources.com.
This is the Financial Survival Network. The information you need to thrive now more than ever.
Yeah, and I know how this is going to sound when I answer that, but remember, you're speaking to a private wealth financial advisor, you know, call it what you will. I might be the boring, but I try to stay, and I believe in this concept. We as a firm believe in this, that, you know, it's not about market timing. It's about time in the market. And that's something we hold true here, you know, using dollar cost averaging approaches, depending on, again, where the client is and what stage of your career you are, what stage of your life you're in. If you're contributing right now, you know, it's one of those things where volatility can become a good friend to you if you know what you're looking at, and you stay disciplined to whatever you're investing, you know. Obviously, there's different types of, there's 2 main ones, right? There's the technical and the fundamental. We tend to be on the fundamental side of, you know, lack of better terminology, looking under the hood, finding the good companies. You know, we obviously, over the past 12, 13, 14 months have seen quite a bear market in the equities, no doubt. I think for the first time I've been sharing in probably 15 years, the majority of my career at least, we're now finally, right or wrong, getting paid for fixed income. You know, it was always a diversifier. So bonds have obviously creeped up, you know, laddering your bonds, keeping them short in duration so you don't get pinched on interest rate risks and those kind of things. And, you know, obviously when you have volatility, you know, it's a good idea to look at certain things like commodities and alternatives, right? Those hold true value, no doubt. And those play a very big role in diversification. So I guess from a macro side, Kerry, I would just say being diversified, and I just had a show. In fact, last week on the Make Your Money Matter show, on our show, I actually went into a whole couple minute dissertation on the 60-40 model. You know, this whole thing out there, like the 60-40 model is dead, right? And, you know, you look at a lot of data, which we drove into, and I'm like, it depends on how you look at it, you know, and really depends on what your goals are with your money, you know? And again, back to the whole thing of income and assets are a married concept a lot of the times for a client. So all of our portfolios here that we manage for our clients are specific and tailored. So there's not a one size fits all that we do. And we do that on purpose because clients' goals and objectives are all different. You know, they have different wants, needs, desires, you know, and then they also have different background, like I shared. You know, we all come from different belief systems. And especially nowadays, right? You and I, you both know as well in our world of this platform of, especially online, belief systems are strong, you know, especially when it comes to three real things I know we all as humans keep close to our chest, right? Money, politics, and religion. It's just, those are big ties for us. And so understanding a client's belief systems and whether that asset class means something to them, or I have a lot of times where clients have been burned, you know, just with previous stuff that they've done or other asset classes. And so we try to make sure we talk through it. And so it's we tend to be on the diversified model side. We're kind of your long strategy and finding the right asset classes that fit for the ultimate goal. You know, it's kind of like that. Yeah.
All right. So we're going through a high inflationary period now. Depending whether you believe the Fed or whomever, it could very well continue. These things go in cycles. The last one we had was 60s, 70s, and 80s. It never really went away, but high inflation, put it that way.
Yeah.
How do you filter that into your decision-making process?
Yeah.
What investments to go into?
That's a great question. I mean, you know, it's interesting to note, you look at the past 4 years, right, since the early 80s or early 70s coming off Carter. Remember, 71, we left the gold standard, right? So all of a sudden we went into printed money world. And I think nowadays upwards of 90+% out there is technically printed money, right? There's only about 8-10% of actual currency, you know, greenbacks that we would call it, right, in the world. And so when you look at those things, interest rates where they are, I think it's also important, and I want to share this, and it's like, to me, what I found in 2 decades of doing this is we as human beings tend to get really myopic in times like this, right? We get really, all of a sudden we go from this to like super narrow and like, oh my gosh, I've never seen this before. And we get kind of fearful. And that's an emotional thing, by the way, totally real. I'm not discounting that at all. But if you kind of open it back up and look over those past 40 years coming off of that inflation, which does come into our portfolio management, you know, we've also seen 6 or 7 recessions in that time period. 45 rate hikes over that time period. We've seen, you know, 2, which this is an anomaly, right? 2 50% market crashes in 40 years, 01 and 08. We've seen 13 or 14 plus US involved wars. You know, we've seen a lot in that environment. This is not, I mean, it's hard to say this, right? Because everyone's like, we've never seen this before. And the reality is there's some truth to that, but there's also like, well, we've also could have said that in a lot of decades in our past too. We've never seen a tech bubble. We've never seen a 9/11 like that. We've never seen, you know what I mean? So we tend to like open it up. And I'm not saying it's only roses going forward by any means, but it's one of those things where I do believe personally that discipline wins out. And it's kind of that old saying, right? It's not the water that sinks. It's not the water around a boat that sinks a ship. It's the water that gets in, you know? And so it's kind of like filtering what information you're letting in. And really that's where I believe talking with counsel, talking with someone you're trusting, talking with an advisor about those things. And so to your direct question, is we definitely filter that in for a client. And that comes back to their belief system and trying to make sure that we provide them with fundamental economic data that's valid and solid. Like you can't dispute it. Obviously there's an emotional tie to that and say, well, there's this, this, and this. And I'm like, that's totally true. But this is how we would manage it based on what you described to us. And then from there, we would filter in what stuff we would, what asset classes and things we would put into there based on that direction. Obviously with interest rates, one of the direct specific points is, again, getting paid on fixed income right now, getting paid on cash. We haven't had that in a long time. You know, you're up 300, 400 basis points right now in money markets, liquid, you know, we haven't seen that in 15 years. You know, granted, we're running at 6 or so % inflation, so it's still losing money technically. But the idea is you're trying to, you know, lower that arbitrage as best you can with some money, with some cash management. And then, you know, there's an old notion of the rising tide lifts all ships. You look at historical data on inflation, you know, equities tend to drive up a little bit. I mean, I think most of the first quarter, at least of this year, the reports that have come out. Obviously, most companies in the S&P 500 have reported 70-some%, and a lot of them have, changed their forecast, the 12-month forecast. So this is not like we're going to be blindsided by stuff for companies like, oh, we didn't know. We've seen it. All the reports are out there. Major companies are laying off, changing, again, quarterly and annual estimates. And so looking at their PE ratios, fundamentals, all of it's forward-looking if you look at it, of what we're expecting out there. The S&P right now is still trading relatively, it's not definitely undervalued where it's been on a capital assets pricing model scenario, but it's trading still 19, 20, 21 times, depending on what you're looking at.
Still pricey. All right. Well, yeah, got a good idea. Appreciate you coming on, Brett, and got a good idea of your philosophy and the way you see the world. People want to find out more about you, buy your book. How do you do that?
The book Retire Right is on Amazon. So you can just put Retire Right by Brad Barrett. You can also follow us at Make Your Money Matter on our show and our podcasts, and that's a good place to get reach of us.
All right. Hey, if you got a question for Brad, myself, on anything, KL@kerrylutz.com. That's the email address. Make sure you go to our site, financialsurvivalnetwork.com. In the show notes, you can click through and buy Brad's book and get directly to his site and podcast. And while you're there, sign up for your free newsletter. Brad, appreciate you coming on, and we will talk to you again soon.
Yeah, Kerry, thank you. Appreciate it.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.